This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Iran could quickly export millions of barrels of oil it is holding in storage if it reaches a deal with the United States on its nuclear program and has been moving oil into place to prepare for an eventual restart, 4 traders and industrial sources said. The U.S. and Iran began in mid-June their 6th round of indirect talks on reviving a 2015 nuclear deal that former U.S. President Donald Trump pulled out of in 2018. Trump reimposed sanctions on Iran's energy sector, leading refiners in many countries to shun Iranian crude and forcing Tehran to pump well below capacity. Negotiations for the nuclear deal took a pause on Sunday after hardline Judge Ibrahim Raisi won Iran's presidential election. 2 diplomats said they expected a break of around.
India's May crude oil imports slipped to their lowest in 3 months as fuel demand sagged amid a second wave of the COVID-19 pandemic that crimped economic activity and mobility, government data showed on Monday. However, imports were still 18.2% higher from a year earlier, data on the website of the Petroleum Planning and Analysis Cell, PPAC, showed. On a monthly basis, crude oil imports in the world's third-largest oil consumer and importer dropped 5.5% to 17.26 million tons from April.
Moving on to the top news in the energy sector.
China's first energy options open to foreign traders made their Shanghai International Energy Exchange, INA, debut on Monday with the new crude oil contract achieving only muted volumes. The arrival of China's second options contract accessible to foreign investors follows the launch of palm oil options on the Dalian Commodity Exchange on Friday and is part of Chinese efforts to increase the country's global commodities pricing power. Open interest and trading volumes for the crude oil options stood at 1,652 and 4,475 lots respectively at the close, though traders and brokers said such volumes were typical for an options debut in China.
BofA Global Research raised its Brent crude price forecasts for this year and next, saying that tighter oil supply and demand balances in 2022 could push oil briefly to $100 per barrel. We believe that the robust global oil demand recovery will outpace supply growth over the next 18 months, further draining inventories and setting the stage for higher oil prices, the bank said in a note dated Sunday. The bank raised its Brent crude oil price forecast to $68 per barrel from $63 earlier. In 2022, it expects Brent to average $75 per barrel versus its earlier estimate of $60. Next, we have the top news in metal markets. China's state planner, the National Development and Reform Commission, NDRC, said on Monday it and the market regulator are jointly looking into the iron ore spot market and have pledged to crack down on hoarding and speculation. The move comes after NDRC said on Thursday that new rules on the management of price indexes for commodities and services will be effective August 1 and will standardize price index compilation and transparency of information. During a visit to the Beijing Iron Ore Trading Center Corporation, the NDRC and State Administration for Market Regulation surveyed iron ore transactions and price changes this year, the state planner said in a statement.
Mining companies operating in Chile will seek to enter the constitutional debate set to start soon in the world's top copper-producing nation as the firms try to preserve growth of the sector, an industry leader told local media on Saturday. A broad political agreement generated after the violent social protests that shook Chile in 2019 resulted in an assembly of 155 members that will have to draft a new constitution for the country. Joaquin Villarino, head of the Mining Council, which unites large firms such as Anglo American, Antofagasta, Barrick and BHP, told local newspaper El Mercurio that it had written a document outlining how the companies would like to operate under the new constitution.
We will now look at the top news in the agricultural sector.
The Indian government's plan to gradually increase ethanol blending in gasoline, as a way to cut pollution and reduce its oil import bill, could be the largest change in the global sugar market since Europe's sugar reform, and possibly drive a bull market. According to a report released on Monday by food trader and supply chain services provider Charnocow Group, India's ethanol program will lead the government to end sugar export subsidies and erase exportable sugar volumes from the country, currently the second largest producer after Brazil. Charnocow's chief analyst Stephen Geldit said in the report that India's plan to push for a 20% ethanol blend to gasoline as soon as 2023, compared to only around 5% currently, will lead to the production of 6 billion litres of ethanol from sugarcane juice and molasses, reducing local sugar production by more than 6 million tonnes.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.